I'm Andy Haldane, I'm the Bank of England's Chief Economist, and tonight I'm going to talk about the role of companies in society. Are they doing sufficient to support our economy? Are they doing sufficient to support investment? Are they doing sufficient to support growth? I think you could see over the course of the last several decades, companies having increasingly, for example, short-term orientation, caring rather more about meeting the needs of their short-term shareholder and perhaps holding too little back, reinvesting too little to support the long-term value of their business, to support the well-being and human capital of their employees, of serving the needs of their customers and clients, and ultimately in playing their role in supporting well-being across society more generally. It's certainly the case that both in the UK and globally, whether short-term or long-term interest rates are at historically unprecedented levels. And you ask yourself the question, why is that? And the reason arithmetically is because the pool of global saving is very large relative to the investment plans of businesses. And that in turn is generating rather sluggish growth. And that's then what links back to the core theme of the lecture, which is investment too low? What is it that is serving as a headwind to investment right now? And I would contend that one factor there, despite low levels of interest rates that ought to support investment, is that the structure of incentives within firms serves to prevent companies investing as much as we would wish to support long-term growth. We've gone through now 6 or 7 years of growth coming in a bit short of expectations. And that has got under the skin of investors, it's got under the skin of households and companies. It's generated uncertainty about the future. And there's a risk of that uncertainty holding back growth right now. And the story of this year has been of that uncertainty ratcheting up, financial markets becoming wobbly, and people being fearful about the future. That's the diagnosis. What's the prescription? Well, I think what policymakers like me, what governments need to do, is to provide a degree of comfort, confidence, a plan of what measures, both short-term and long-term, particularly long-term, they will put in place to support underlying productivity in the economy, and therefore underlying growth in the economy. This isn't about short-term fixes. Monetary policy can't be the whole answer. It requires, in some cases, a reconfiguration of how our companies work, of how our banks work. And tonight's lecture is about just that.